I mean, I think at the end of the day, Bitcoin and crypto will go higher because retail people will get involved, right? The distribution because the prices are going up. And that has nothing to do with institutional or not institutional. Institutions don't determine where the price is. If there's nothing useful being done for the average person, then this isn't going to go higher. If there's not money printing happening in enough quantity, then nothing is going higher. Whether Larry Fink attends a conference or not is sort of irrelevant.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
Let's start with the core observation. Bitcoin fell sharply around 50%, while the NASDAQ remained relatively strong. Most investors assume these two should move together. Both are considered risk assets, both thrive in liquidity-rich environments, and both are sensitive to macroeconomic conditions. But Hayes argues that Bitcoin wasn't tracking big tech, it was tracking something else entirely. Instead of following companies like Apple, Microsoft, or Google, Bitcoin was reacting to signals coming from a different corner of the market: software as a service, SaaS companies. And those companies have been getting crushed.
So one other note that you put on the, I guess like a screen, was that Bitcoin has been down 50% while the NASDAQ has remained kind of basically flat or like at all-time highs. Can you just explain to me again what that means exactly? Like why is that happening? Why did that happen?
So my interpretation of that is that Bitcoin was following a theme that credit is going to be destroyed because of AI knowledge worker job losses. So obviously tech is a very monolithic term, and when people say tech, they usually mean like the big tech stocks, Google, Microsoft, Amazon, Tesla. But you know, consumer software as a service companies are some of the highest valued companies. These are, everyone wants to have a SaaS company. These stocks have gotten absolutely crushed as the new models of Claude and the ChatGPT, especially for people who code for a living, have come out. Like, well, I can create these products at a fraction of the cost. Why do I need a subscription at one of these SaaS companies? And those stocks have gone down a lot. In my mind, that points to a possible credit deflationary event for the banking system. And if the central banks, like the Fed, believe that AI is a productivity miracle and will elevate growth without elevating inflation, they don't believe they need to print any money. They believe that the monetary system is adequately supplied with fiat liquidity, but these SaaS stocks are telling a different story. And Bitcoin followed that story rather than following the big cap tech stocks. And so that's where I get at least my theory that this is a credit deflationary event that Bitcoin was foreshadowing, and the monetary system was not creating enough liquidity to sort of head that off.
And so then do you think eventually you'll see the NASDAQ as a whole kind of turn down a little bit, or will it just continue to remain elevated and Bitcoin will kind of
so I think obviously then the war happened, and so now we have an explicit wartime economy, especially in the United States, where they're going to spend more money in defense. There's all these programs where people have guaranteed offtake agreements with the government. They have they're considered strategic industries. There's loans, there's equity. All these things are flowing from the government, and then the banking system, I argue, is going to provide trillions of dollars of credit to these strategic industries so that they can build more bombs.
What about the other big narrative I would say that has dominated this kind of bear cycle to this point is just like OG cypherpunk people being disillusioned with how institutional things have gotten, and how those ethics, those axioms are kind of not important anymore. Do you subscribe to that, or do you also just not care?
I mean, I think at the end of the day, Bitcoin and crypto will go higher because retail people will get involved, right? The distribution because the prices are going up. And that has nothing to do with institutional or not institutional. Institutions don't determine where the price is. If there's nothing useful being done for the average person, then this isn't going to go higher. If there's not money printing happening in enough quantity, then nothing is going higher. Whether Larry Fink attends a conference or not is sort of irrelevant.
Do you believe Larry Fink when he talks about like transparency and immutability or anything like that? I've asked other people this too, by the way.
I don't know. I think at the end of the day, there's a lot of cost to be saved for banks using a public blockchain, right?
Yeah.
And I'm sure there's a fight of there's middle office and technology people who will literally lose their jobs overnight if a bank went to a fully using a public blockchain to like do settlements and all those sort of things. That doesn't mean they like Bitcoin or subscribe to any of the ethos behind it. This is literally just like, you could literally fire your entire back and middle office compliance functions if you did everything on chain. And how much money would you save, and how much bigger of a bonus could you get as a front office senior manager? I think that is the tension that's going on internally in a lot of these organizations.
Okay, 2 more questions. So you, just to bring it back to your presentation, you said that Bitcoin has bottomed. I think you said something like long here, or I don't know.
Get long or be wrong.
Or yeah, long or be wrong. There we go. So this is the start of the bull run then, just to make it clear.
Well, I don't know. Bull run says, oh, we're going to go like up, double in like the next 2 months. No, I think this is a slow grind. I still think there's so many things to people to worry about, whether it's AI deflation, whether it's, XYZ said this on social media, therefore the US, Iran, China, Russia, whatever, it's going to do something that's bad for humanity. Like there's still that. So there's a big wall of worry to climb. And so let's talk about a bull run once Bitcoin has re-established 125,000.
Yeah.
And then we'll see.
Retail time. Okay. Very, very good. So you're at the Bitcoin conference today, and then next week you'll be at Consensus Miami. I was wondering, do you like try to take the temperature or like do a vibe check at these conferences at all, or is it just simply to kind of meet people and then get your message out?
It's more to meet people, get the message out, but I think the vibe check now is obviously people are despondent. The room was half empty, right?
Yeah.
And this is,
yeah.
Bitcoin Vegas, the biggest, Bitcoin maximalist conference in the world, and half the seats were empty. So obviously it's a vibe because the price is pretty much where it was last year at the same time, but everyone felt, very optimistic that the U.S. government's going to support their bags and this and that. And obviously it turned out that like, if the money isn't printed in big enough quantity and all these other things happen, then price ain't going anywhere. Yeah. So I think there's a lot of disillusionment.
You made a point of talking about liquidity and how you believe liquidity is, I guess, bottoming and is going to start to rise up. I've heard other macroeconomic folks talk about how the real economy, especially in the U.S., has not been doing well, but is starting to do better. And there are some signs that we're going to be entering this kind of productivity boom for, I would say, non-financial assets. And then that because non-financial assets will, on a comparative basis, do less well, then liquidity will go from financial assets to non-financial assets, which is in a way kind of liquidity leaving those areas. Do you disagree with that? And if that does happen, wouldn't that hurt like things such as Bitcoin?
I mean, I don't really look at too deeply on like where the money is flowing. I try to take a bigger view because obviously you have to go to a bank loan officer, like where are you lending? What type of company are you lending to? I just look at the past history and say, okay, well, if there's more units of fiat in the world, whatever they're being spent on, than Bitcoin, which is literally just a derivative of how much fiat is there in the world, mathematically has to go up in price. So I don't have to worry about where it's going. But yeah, if I'm an individual stock picker, then that makes a lot of sense in terms of trying to figure out what areas are going to be favored by banks.
Okay, yeah. All right, and you also talked about, you spent a bit of time talking about Warsh and Besant and how the game plan is basically a swap, as you called it, which I like. I like this framing. It makes sense for crypto people at least. But basically, to me, what you were saying is swapping who is issuing debt. Right now, it's mostly the government.
No, who's buying it?
Oh, sorry, who's buying debt? Right.
Well, who's holding it at the end of the day?
Yeah. And it's going to, and Warsh and Besant want to move it from basically the government to private banks.
Yes.
And that's the swap, but it's neutral.
It's neutral.
Yeah. And that makes a lot of sense to me. I just wondered if you had an opinion on whether they're going to be successful or not at this thing. Do you think they're going to be able to do this, or do you think trying to pull off this swap will be too disruptive and they'll have to go back to the way
it's already working to a large. If you look at the largest banks' quarterly results, they've increased the amount of treasuries they're holding. They've increased the amount of intermediation they're doing in the markets on their trading and treasury books in terms of that. They've increased how many repos they're sponsoring. Reserves are declining at the Fed. So this is working.
Yeah.
Right. And so it's just only going to accelerate with certain deregulation things that they're pushing at the Fed and other organizations in the U.S. And again, the Fed will shrink its balance sheet, but the commercial banking system will increase it at the same amount.
Okay, all right.
So what is credit deflation? In simple terms, it's when the availability of credit in the financial system contracts. Lending slows down, risk appetite declines, and economic activity can weaken. Hayes believes the SaaS downturn reflects a broader realization. If AI reduces the need for human workers, especially high-paid knowledge workers, then income, borrowing, and spending could all decline. That's a deflationary force. And here's the key insight. Bitcoin reacted to that deflationary signal before traditional markets did. While the NASDAQ was still buoyed by mega-cap optimism and AI hype, Bitcoin priced in a tightening credit environment.
The number of hacks makes me a little risk-off for DeFi. I don't know if you're feeling that. And I don't know how that changes your view of hype or hyperliquid. Not that it's going to happen, but just that you have to kind of price that risk.
I mean, the risk has been ever present.
Okay.
It's just people have not recognized this risk. And so obviously with Drift, with Kelp DAO, with all these things, it's a reminder that, this is very experimental stuff.
Yeah.
There's a lot of human error involved. A lot of it's just laziness. Like, it's not like, there's all these social phishing campaigns, maybe with the North Koreans, maybe it wasn't. Doesn't really matter. Doesn't excuse the fact of having a one-of-one multi-sig.
Yes.
Or
yes.
not, being able to protect the integrity of your process flow in terms of how you sign transactions.
Yeah.
So I think that is the issue, not the tech. This is a human problem.
Okay. Does the number of hacks and this kind of narrative that AI is going to enable, at least in the short term, kind of like an asynchronous number of attacks before defense kind of is able to fight back, does that make you bearish for DeFi in the short term?
I think it's the wrong question.
Okay.
These hacks are, again, they're human issues.
Mm-hmm.
There are people who had an operational process that was easier to do than doing it correctly,
mm-hmm.
and they got owned. And so whether it's the AI or it's some souped up, nation state actor attacking, like if you can't even do a proper multi-sig correctly and have a proper signing process, I don't really care what your tech stack is.
Okay, I see. So then you wouldn't be just more bearish on the sector in general? Because for me, I look at that and I'm like, I think there's probably a lot of teams that maybe are like that, like not focused on security. And so then we might see a rash more of these hacks before everyone really starts to just like, that's the focus.
Maybe, but again, I think if something's working, people don't care.
Mm-hmm.
Back Mt. Gox 2014, everyone's like, oh, centralized exchanges, we're never going to put our money on an exchange again. Price went down. Fast forward a year and a half later, price is back up. Nobody cares anymore, right? Like,
yeah.
How many hacks have happened on centralized exchanges? Obviously, some people have paid the money back, some people haven't. Yet we also use them, more than we did before. Again, if the price goes up, no one cares. Price is down, everyone's freaking out about DeFi this, DeFi that, right? But if we're in an environment where the strong projects are doing very well, everyone forget all this stuff.
Are you bearish on any sectors in crypto right now, or are you mostly? Yeah. Are you?
I don't think about bearish things because I can't I don't like shorting things. So cool. I can be bearish on whatever vertical. Does it mean I'm going to put on a short? Absolutely not. There's so many ways teams can fuck you with in terms of how they do the tokenomics and pump and dump schemes. Like, you do never want to be short any project. If you want to be short, just don't buy it.
Okay. I see. All right. So I was just in Paris for Paris Blockchain Week, and it was kind of the amount of optimism over there is starting to get high with MiCA. The regulation has been out for a year and a half. They have new licenses for payments and derivatives. I was wondering if you have any thoughts on Europe in general as a place for crypto, a good place for crypto, or is it still kind of far behind Asia and maybe North America?
I just think it's who cares. It just doesn't matter. It's irrelevant. And like in most things, it's a great museum.
Oh, nice. Clip it.
Yeah.
Okay, great. Anyway, for those listening, I really enjoyed your keynote. I hope they watch it. Short, 15 minutes.
Yes.
Again, like I told you, I wish they had given you a little more time to let it breathe. But let me ask you some other questions, if you don't mind.
Sure.
So last time we spoke, we were talking about this stablecoin thesis. I think it was in Tokyo last year. And ever since then, I really bought into that idea. And I went to conferences in Hong Kong, Japan, Europe, Middle East, talked with people from Pakistan and government officials. They're all worried or thinking about these stablecoin things. They all have a plan to fight back against it. And I was wondering, do you think that any of these countries are going to be able to stop this onslaught of dollar-denominated stablecoins?
If they are going to ban social media, sure. But like, unless they are going to be able to do something like China, where for most people in China who are not extremely wealthy, they're not going to spend extra money on a VPN to get around these rules. They're, if Facebook is blocked in China, it's blocked in China.
Yeah.
Right. And the Chinese firewall is very effective. They spend a lot of money and time on it. Right.
Yeah.
So if you want to be like China, or in some parts of the Middle East, very restrictive in terms of social media, Western social media usage, and you're going to create your own homegrown alternative to that, then you have a chance. But if you're not going to ban the average person from using US big tech social media, you have zero chance against trying to dissuade them from using, at least in the fiat world, a better currency, the US dollar.
Yeah. Okay. Doom and gloom. It was
for them. I don't know. It depends.
It's funny too. Like in Hong Kong, the business leaders there and a senator, they called it dollar colonization.
Yeah, not wrong.
Not wrong. Okay. All right. So also last year when we talked, you were of the opinion that the United States would be forced into money printing sometime this year. Do you still think that's going to happen, or do you think it's being pushed out to...
Well, the Fed is expanding its balance sheet. So as of December of last year, they stopped quantitative tightening. They created this thing called Reserve Management Purchases, RMP, which is basically quantitative easing in a different wrapper. And so the Fed balance sheet has been going up with $40 billion a month, as they said it would. So they are printing money. Now, I didn't think it was fast enough to head off this deflationary impact. But now, post the war, we have this massive demand of credit coming from the U.S. government to support strategic industries. That credit will be supplied by the U.S. commercial banks, and then the regulators will give them the regulatory space to jack up the leverage on their balance sheet. So the money printing is happening. It's only going to accelerate.
Yeah.
Finally, Hayes discusses the rise of dollar-backed stablecoins. He argues that most countries have little chance of stopping their adoption. Why? Because stablecoins offer something incredibly valuable: access to the US dollar, the world's strongest currency, through the internet. Unless governments impose extreme restrictions like China's firewall, people will continue to adopt them. This creates what some call digital dollarization, or even dollar colonization.